Good afternoon, everybody, and welcome to this week's weekly analysis session for the Elite Traders Club, Friday, the 18th of March. Let's get underway. It's been an interesting week this week. We've had the FOMC statement over in the US, and certainly since that point in time, the markets have had a bit of a boost. This afternoon, I did spend some time with Jeff and talked about the impact of the FOMC statements, and all along, what Jeff has been saying has pretty much come to fruition, and since Wednesday we've had a bit of a rally in gold. Certainly the commodities have picked up, and so have a number of stocks along the way. Our disclaimer: first and foremost, the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So before making an investing decision, based on the general advice presented in today's presentation, please consider whether the advice is appropriate in light of your financial circumstances, or seek further advice on its appropriateness. All right, so we'll just go through. We will have a look at what our portfolio management system is telling us at this particular point in time. Obviously, that means having a good look at our benchmark index. We'll go through and have a look and see if we can see any specific setups, and some Q&A for any questions that you might have along the way. Currently, our benchmarking model, the ASX 200, is in moderate risk territory. It's been a while since we've been in that, and it's certainly good to see that a bit of strength returning. Certainly, our stocks in the watch list have continued to hold up quite well along the way, and it just goes to show that if you if your searching area, if you like, or your field of searching is amongst those stocks that are showing good relative strength, then the chances are that they're at least going to hold up well during any market pullbacks. But certainly, if you happen to be fortunate enough to get a couple of those that hold up really well through all the downward movements, when the markets do recover, they move onwards and upwards accordingly. So our benchmarking model, we are in moderate market risk. Our stochastic has just moved back up above that 60 level, between 60 and 80. Should we get up to that above that 80 level, it will put us in low market risk territory, and we haven't been in low market risk for a long, long time. At the moment, we do still need to apply an 80% market risk multiplier. That's applied to our 15% maximum allowable drawdown, and that basically means that we can have 12% of our capital exposed as risk. Another way of thinking about this is just using that as a percentage basis and saying, okay, well, of all my capital, particularly if you're not using any form of leverage, you're using direct shares, then having around 80% of your capital exposed to the Australian market is fine at this point in time. That assumes that you are trading solely in the Australian market. All right, just a quick recap for the macroeconomic session this afternoon. We did spend a bit of time talking about the FOMC statement and what it means for markets. So if you're looking for a little bit further detailed information about that and some of the impacts around the world in different market assets, if you like, different classes of assets, then certainly feel free to go and see that in the portal. Just a reminder, this Monday there will be a USA session. There wasn't last weekend because we had a break in Victoria on the Monday. All right, let's go across to Beyond Charts now and have a look, as we do first and foremost every week, have a look and see where we're up to on the benchmark. Now, because we run this on a Friday afternoon, we don't actually get a settlement on the ASX 200 until later in the evening. So the last candle there is yesterday's candle, so we don't get that until around about 7 o'clock tonight. But still, certainly not enough movement in today's market action to drag our stochastic anywhere near the 80 level. So for the time being, we still remain in moderate market risk. One pleasing aspect about this is that we're starting to see this longer-term moving average looking like it's providing a zone of support or a zone of demand, and that's a positive for the market. So we'll keep our fingers crossed that continues to move onwards and upwards. Certainly, some of the strength lately, in particular, some of the mining areas, the mining stocks, etc. Gold stocks in particular have been quite strong from coming off fairly low bases. So that's our market risk for the time being. In terms of new setups this week, well, We'll go through and have a look at those in a moment. What I wanted to do was just recap on last week's ones. There is one stock from last week, Cochlear, which has had a pretty bad week this particular week. And as a result, it's now exhibiting pretty much negative sort of price action. We've now actually got lower peaks and we will have lower troughs. So from that point of view, we can't be long in this particular style or this particular mode of price action, and this one will come out of the watch list on that particular basis. There were still a couple of trades that are still pending from last week. Just draw your attention to those. Mobile Embrace. This last candle here, certainly not a terribly strong looking one. It wouldn't surprise me if that actually rolls over next week. Not showing a lot of relative strength, really, in comparison to previous weeks. But we'll just have to wait and see with that. And the other one that we had in there from last week, JB Hi-Fi. Again, this last week's candle, certainly not as strong as it could be. And again, we'll just have to wait and see what happens with that one to see whether we get any follow through the following week, whether that's going to trigger or not. But certainly for the short term, we're still in short-term uptrend, medium and longer-term uptrends, all in alignment as well. I've just gone through and run the scan. I did have 57 records that came up, and I've had a quick look through all of those, and I couldn't find any new setups that met our price action 100%. There were 3 setups that were very, very close. And I'll go through those. I won't put them in the watch list because the ones that are in the watch list, I'm making sure that they have 100% ticked the price action filters. So what I'll do here is I'll just put on our overlay there. So here's a stock, AOG. Why has it come up on the scan? Well, obviously the 3 trends are in alignment. They're diverging, which is good. Good relative strength. This is a stock that's really sort of been if you like, an ugly duckling from the point of view of the stock market for quite a period of time. But more recently, if we just sort of zoom in and have a little bit of a look, you can see that the market has started to pick it up, and ever so slowly it's started to move higher and higher over a period of time. Now, in terms of the price action is actually pretty good on this stock. That last trough there, is it at or above the second from last medium-term peak? It's very close. So I'll just put the value line on there. The high of that last medium-term peak there is at $3.09, and the low of the trough there is at $3.08. So look, it's very, very close. And in terms of obstacles, etc., that has to if you like, get past on its movement upwards, well, there is certainly a level there at that long-term peak. That's the highest point between our medium-term uptrend and medium-term downtrend, so it makes it a long-term peak. We've come within 1% of that, so it would qualify as a first test. The only problem is that price action, it's not 100%. And if we zoom out, are there any other obstacles overhead from that point? Well, there are, but they're a reasonable sort of way away. So you can see that there's quite a bit of space for this stock to run up there, should that particular level break. Now, if that was something that you wanted to have in your own portfolio, certainly I wouldn't be too worried with that. It is a stock that's rebounding off its lows, and just recently exhibiting some good price action and some good relative strength as well. That was AOG. MQA, Macquarie Atlas. Just bring that one up. Just zoom out and see where we are on this one. And 100% all the way out. We're at all-time highs. So again, think about this from the market's point of view. It certainly seems to like this stock. Now, whether or not, if you had had this stock many years ago from a very flat level, so as an example, a stock that spent really, a number of years going sideways before breaking out, and then eventually moving along quite nicely over that period of time. So a stock that's gone from around about $2, getting close to $5 in the space of about 3 years is certainly still a very good return along the way. And simply using something like a 63 period moving average, which is our blue line there, would certainly keep you in that particular stock for a long period of time. We've talked about this on some of the education sessions, and help you to collect some of those dividends along the way. Certainly if you chose to manage your trailing stop with the use of perhaps a slightly tighter 3 ATR, there'd be a couple of instances, maybe that one there, that I'd just have to go through and check, but I think that's probably also escaped the stop out on that particular one there. So both of those helping you to stay in a trade for a long period of time. So again, just wanting to provide a different option for those of you who want to be a little bit more longer term and not quite so reactive to the vagaries of the market, so to speak. Another one, SLK, a Sealink Travel. Again, only a fairly new stock, and would only have come up in the scans over the last 2 weeks, and that's because that little bit of green there is the longer term moving average. That's 125, and that's only just appeared on those last 2 candles, which is quite interesting. So first time that one would have actually come up on the scan on a weekly basis, that is. Certainly looks very good. Good relative strength. A lot of white candles in that as well. The only aspect of this that negates it for being a 100% trade is, where is that trough at 386? Where's that in comparison to the previous high there? That was 386, and over here our high is at 392. So that trough's just a little bit lower than that previous, that second from last medium-term peak. Other than that, it really does tick the boxes and is looking quite strong as well. So again, ticking just about all the boxes. It won't go in the watch list because it hasn't ticked them all, but certainly as far as a new setup, looking pretty strong. In terms of stop outs, there weren't any stop outs in the portfolio for the last week, so that was a good sign. Again, the watch list holding up very, very well. In terms of the opens, VTG, Vita Group, continues to just power onwards and upwards, and again, really nice candle, gapping up at the open this week and remaining high. So again, a very, very strong candle, and this just looks exceptionally strong at the moment and really good relative strength along the way. It has run a bit, so I wouldn't be surprised in the next week or two to see perhaps potentially a price volume volatility signal go off, but certainly travelling very nicely. AOG, which was one that we had a look at earlier, this is actually already in the portfolio. It's been certainly one that would have really tested your patience with moves to the upward side, back to the downward side, looking like you're almost going to be stopped out during the course of a week early on, only to regain a bit of strength, move sideways, and again, just recently just starting to exhibit some more encouraging price action. And by in doing so, this last week, having a higher close, it's actually dragged its trailing 3 ATR up a little bit as well. So that's now up above, certainly past the key entry level, and moving along in the right direction at long last. One saving grace to all of that is picking up the one dividend along the way, but certainly been a bit sluggish by comparison to some of the other ones. BWP is also another one that's would have really sort of tested your patience for a little while. Again, picking up a couple of dividends along the way, and recently, just those last couple of weeks have been quite encouraging, and now just really testing this point of supply here. So if we can get through there, then typically, what we would expect is something like this sort of price action where it's come up to a previous level, broken through, retested before moving onwards and upwards again. So, that's the sort of thing I'd be looking for this to do. So really what that means there's obviously a bit more strength in our market, breaking through this particular level, then coming back down towards that sort of 340 odd level before regaining some more strength, and the market pushing it further up. They're the sorts of things that you're looking for when stocks are coming up to those previous zones of supply. All right, folks, did anybody manage to find any other stocks that were worth a look at? I know the market data's only just come through. Are any stocks in your portfolio that are performing well and you'd like to have a quick bit of a look at? If you don't have any that at the moment that you want to have a look at, that's fine. Certainly during the course of the week, shoot us an email, give us a call, and we'll happily have a look at your portfolio, see how it's performing, and see how you're actually managing your trades. It's certainly the last 12 months has been, it's been more of a challenge on the emotional side of things, seeing stocks go up, go down, go up, go down, go sideways, go down, go up. But certainly, some prudent trailing of stops, doing it in a very simplistic manner. Hopefully you've been able to do that and reap the benefits of being patient and seeing some of the stocks that you've held over that time really, hold up very, very strongly given what's happened with the rest of the market, and along the way as this market's starting to recover, dragging some of those stocks onwards and upwards as well. All right, folks. Well, if there's nothing more, we'll call an end to it there. We've just gone around about 15 or 16 minutes. Don't forget, those of you who are trading in the US, there will be a webinar at around about 2 o'clock on Monday afternoon. So keep an eye out for the invitations for that. And at around about that same time, the watch list will be published as well. All right, have a good weekend, folks, and we'll catch up with you next week. Bye for now.